Hello and welcome everyone to the commodity report for the 8th of April 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So over the last 24 hours, we have seen natural gas prices breaking out to 6-month highs. Alongside that, at the beginning of the week, we had copper prices break out to 1-month highs. Gold prices, they still remain range bound, yet we have seen that typical move higher at the end of the week, breaking back to $1,837 per ounce. Not only that, silver prices, they've broken out to the upside over 1% on Thursday. Energy prices as well, they broke down to 3-week lows for WTI crude oil and Brent crude oil, but actually offered a fantastic opportunity to sniper in at the lows that we saw on Thursday, before we then had over a $3 rally to the upside. In fact, with our clients at the Gold and Silver Club, live on our trading room, we executed a position on crude oil at $94.20 per barrel. Subsequently, after that, within 2 hours, we had over a 300-point gain on that market. So, of course, for every one lot contract that you would be trading for that calculation, that would be $3,000 profit for you. For every 10 lot contract that you'll be trading, that's $30,000 of profit just within a couple of hours, snipering in to energies there, taking advantage of the breakdown in price back towards 3-week lows and subsequent slingshot move higher to the upside. Not only did we get into WTI crude oil, but also Brent crude oil as well, which is currently up 250 points as well. As we mentioned so many times to you, take advantage of this volatility, bank into strength, take advantage of the range-bound price action, then sniper in, reload at the lows. You can do this time and time again, particularly when the market is a bit more range-bound like we've seen over the last week. You can capitalize massively on that day-to-day range-bound price action. We talked you through this at the beginning of the week with gold. Essentially, we see accumulation down towards the 1900 zone and then look at profit taking back towards that 1940 to 1950, 1960 range. We'll see how the price action closes at the end of the week, but certainly into Thursday's close, we've started to see momentum build back up again, particularly with silver, with platinum, with copper, and gold as well. So I would certainly have metals fully on the radar here towards the end of the week. And then as we go into next week, we have more inflation data, which again, that will create big volatility in the market. We've had inflation readings coming in at the highest level in 40 years. All of this is helping to propel the commodity super cycle significantly higher, where over the last quarter, gold had its best performance in over 2 years. And with that, we saw parabolic moves last quarter on energies, with energy prices, crude oil, WTI and Brent both breaking out above $130 per barrel. Alongside that, we have palladium and copper prices. They broke out to all-time highs, as well as nickel prices, which accelerated over 250% in a single day. We've had agriculture markets go parabolic, everything from wheat to corn to soybeans, and alongside the metals such as zinc and aluminium over the last quarter. So really, you want to make sure that you're not missing out on this commodity super cycle. If you're not making money at the moment, you absolutely should be. There's so many opportunities for you to take advantage of. Now, as we go into next week, we're also going to be building momentum into the Easter break. And typically the markets, they tend to transition into risk on. There's a lot of optimism in the market in the lead up to the Easter holidays. I would definitely look out for that as we go into next week. It's going to be a shorter week for trading next week, a 4-day week for you to capitalize massively on the current trading volatility. In the last week, with respect to hedge funds and money managers, overall the net long position for funds into energies remains at 85% for crude oil. So of those hedge funds that have exposure to energies, 85% are currently long. It's similar on silver at the moment as well, residing at 82%. So 82% of funds that are currently have exposure to silver, they are currently long this market, 79% on gold. So you can see here that the majority of commodities that we're tracking and discussing with you on the commodity reports, hedge funds and money managers have significant long positions on this market. And there's a very clean way to get exposure and continually take advantage of this current market volatility. And again, this comes down to having a research-driven approach to the market, utilizing statistics, data, market intelligence, learning and understanding the daily, the weekly, the monthly, the quarterly cycle for each commodity, the intermarket correlations, the ratios in the market, the key areas of liquidity, how to spot particular zones where you want to be accumulating and other zones where you want to be starting to bank into strength and take profit off the table. Alongside that, of course, understand the macroeconomics, the geopolitics, the fundamentals, and of course how the hedge funds, money managers, banks and institutions are positioned in real time. That will help you massively to get an edge So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.